Hello friends, this is Surya Padi. Let us solve some of the 2019 AICPA released questions. Visit my website, that is cpa.suryapadi.com, or subscribe my YouTube channel for updated information. Question number 21. How would the following ratios or measures be affected if a company issued additional capital stock for cash? Option A, increase in total debt to total asset, increase in working capital. B, increase in total debt to total asset, decrease in working capital. C, decrease in total debt to total asset, increase in working capital. Option D, decrease in total debt to total asset, decrease in total decrease in working capital. So if a company or if an entity issue working capital for cash, the journal entry would be cash debit to common stock credit, right? This is CA, this is current asset. So that means there is an increase in the current asset and there is an increase in the equity. So we have to find out the working capital. There is increase in the, because if the case is increasing, that means the working capital is increasing, and out of the given options we have to find out where the option says there is an increase in working capital. So in this case of option A, there is an increase in working capital, and in case of option C, there is an increase in working capital. That means option B and option D we can eliminate. Now we have option A and option C. Out of that we have to choose one. Let us see. So total debt to total asset. So if assume that the total debt is $100 and total asset is $200, and there is no increase after the issue of the common stock, there is no increase in the total debt. The total debt remains same, but the cash is increasing. That means total asset is increasing. If the cash we are receiving is $100, that means we are receiving $100 additional. So our total debt to total asset will be 100 by 300. So if we calculate the ratio and compare it to the previous one, previously we have 100 by 200, 100 by 200, that is 0.50. Now we have 100 divided by 300, that means 0.33. So that means it is decrease. So out of the given option, total debt to total asset decrease is option C. And if you are issuing capital stock for cash, and there will be increase in the working capital. So for question number 21, the correct answer is C, that is decrease in total debt to total asset and increase in working capital. Question number 22. Dart company had a current ratio of 3:1 and quick ratio of 1:1. Current liabilities were 322,000. What was the total amount for inventory and prepaid expenses? The question is, what is the total inventory and the prepaid expenses? So current ratio is CA by CL, and whereas a quick ratio is quick asset divided by quick liabilities. So the difference of these two is equal to inventory plus prepaid expenses. So if CL minus CA minus quick asset by CL equal to inventory plus prepaid expenses by CL. The CL they have given, current liabilities they have given 322, and this ratio, so current asset minus quick asset equal to 3 minus 1, that is 2. If the current liabilities is 322,000 and quick asset is, that is inventory and the prepaid expenses, is twice of current liabilities, that means 322 multiplied by 2, it equals 644. If you see the given options, option B is the right answer here. Question number 23. Which of the following is an essential element of the audit trail in an electronic data interchange, that is EDI system? A. An integrated test facility that verifies the accuracy of data. B. A heuristic program that accesses a remote location. C. Hardware security modules that store sensitive data. D. Computer activity log that indicates failed transaction. They are asking for the audit trail. Which of the following is the audit trail for EDI? Audit trail, basically it is a history of information what happened in the past. So it is kind of a journal or a log which depicts what are the steps as executed, what is the past information, and what are the failed information. So based on the options given here, A, an integrated test facility. This is the test facility, whether it will say we are using here to validate the data. It will not show the log, or it will show only the pass or fail result. So this is not a right answer for this question. Option B, a heuristic program that accesses remote location. It is a program which helps us to locate, to connect the remote location. This is not a log of the transaction processing. Option C, the security modules that store sensitive data. This is a some kind of storage of the information, do not provide any type of log for the audit trail. Option C is not the correct answer. Option D, computer activity log that indicates failed transaction. This is the right answer because it is logging the information why the transaction has failed. That will help us to track as a audit trail. So for this question, answer option D is the right answer. Carter Company had the following items on its balance sheet at the end of the current year: cash and cash equivalent 200,000, short-term investment 100,000, account receivable 400,000, inventories 600,000, patent that is for the 10 years 300,000, equipment 1 million, accumulated depreciation 200,000. The amount of current liabilities at the end of the current year was 640,000. What is Carter's working capital at the end of the current year? The question is calculation of working capital. So what is the formula of working capital? CA minus CL. They have given the CL here, and we have to calculate the CA, current asset. Current asset is the sum of cash equivalent, short-term investment, account receivable, and inventories. And the last three, that is patent, equipment, and accumulated depreciation, these are the long-term asset and not relevant for the working capital calculation. So if we add together these first four, this is 200, 100, 300, then 700, 700 and 600, 1300. Okay, minus this is CA minus CL is 640. So 1300 minus 640 equal to 660, and that is our working capital. Out of the option given, option A is 60,000, option B is 560, option B is 660, and option D is 960. So the correct answer for this question is option C, that is 660. Watch my YouTube channel, subscribe my YouTube channel, and also you can watch all these videos on my website, that is cpa.suryapati.com. An issuer board of directors would ordinarily participate in each of the following activities except option A, establishing long-term strategy and objectives to which their information systems should be aligned. Option B, supervising, monitoring the quality control testing upon the installation of a new information technology system. Option C, ensuring that suitable information technology resources and skills are available to meet the company's strategic objectives. D, maintaining awareness of current technology used by organization to ensure its efficiency and effectiveness for financial reporting. Answer is where, on what are the circumstances the board of directors participate, and here this is the we have to find out of these four which option is wrong. So that means 3 is correct and 1 is wrong. We have to find out which one is wrong. So board of directors always participate where long-term strategy and objectives involved of the company. So option A is establishing long-term strategy and objectives to align the IT technology, and obviously the board will participate in this activity. So this is not the right answer. Supervising, monitoring the quality control testing upon the installation of a new information system. This is more about day-to-day operation where we need to test the change of the technology. So in this activity, generally the operational manager or IT manager will participate, not the board of director, and this looks like a correct answer. Option C, ensuring that suitable information technology resources and skills are available to meet the company's strategic objectives. Once again, it is company's strategic objectives. Board of directors must ensure that they have resources and skills to support the information technology, which will in turn support the company's strategic objectives. This is not the right answer. And option D is maintaining awareness of the current technology used by the organization to ensure its efficiency and effectiveness for the financial reporting. So here is also to get or to maintain the awareness of current technology, what they are using in the organization. This is also related to the strategy and objectives of the entity. So this is not the correct answer. So out of the option given here, option B is relating to the operational control, and where board of director doesn't participate. Subscribe to my YouTube channel to get notification for new videos. Also share my YouTube channel with your friends.